Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing jargon of corporate finance and find out if the numbers actually add up. Today we're diving into a recent report from Putnam International Value Fund, and let's just say there's a lot to unpack, especially when it comes to how they're managing your money. Before we get into the nitty-gritty, if you love getting straightforward financial insights, make sure you're subscribed. Also, we've got a growing community on Discord where we discuss these filings further, so check out the link in the description below. This report covers the period up to June 30, 2025, and it gives us a peek into how this investment fund performed, what changed, and where your money is actually going. So this document is filed with the US Securities and Exchange Commission, and it's essentially an annual shareholder report. It's like a yearly checkup for the fund showing how it did and what's going on under the hood. Let's kick off by talking about cost, because who doesn't want to know where their money is going and what it costs to manage it? The report breaks down the expenses for a hypothetical $10,000 investment in Class A shares. For the year, the cost added up to $114, which is about 1.02% of that investment. Now, they mentioned that this figure reflects fee waivers and reimbursements, meaning without those, the cost would have been even higher. That's important to note, because always remember that when a fund highlights fee waivers, it's a good sign, but it also means the actual underlying costs are something to keep an eye on. Now for the performance for the year ending June 30, 25, Class A shares of the Putnam International Value Fund saw a return of 23.38%. That sounds pretty good, right? But how did they do compared to their benchmark? The MSCI FFE Value Index NR, well, that benchmark returned a slightly higher 24.24% over the same period. So while the fund did well in absolute terms, it slightly underperformed its benchmark. Digging into what drove these numbers, the report highlights a few key players. Positions in AIB Group, a financial services company, Qantas Airways and Thales, a technology and security services provider, were noted as top contributors. On the flip side, some overweight positions acted as headwinds. These included Glencore, a commodity trading and mining company, Minebea Mitsumi, an electronics manufacturer, and AstraZeneca, a biopharmaceutical company. It's always interesting to see how specific holdings can sway the overall performance. Moving on to longer term performance, the report gives us a table of average annual total returns. For Class A shares over 5 years, the return was 14.91%, and over 10 years it was 6.79%. Compare this to the MSCI EFLV Value Index NR, which posted 14.29% for 5 years and 6.05% for 10 years. So over the longer haul, they actually managed to beat their benchmark on a 5-year basis, and it's pretty close on the 10-year mark. This shows that while short-term performance might lag, the fund has shown resilience over longer periods. Let's look at some key statistics. As of June 30, 25, the fund's total net assets were $767,511,080. That's a substantial amount of money being managed. The total management fee paid for the period was $2,682. This is a significant chunk of change, and it aligns with the percentage cost we saw earlier. The portfolio turnover rate was 26%. This means about a quarter of the fund's holdings were bought or sold during the year. A turnover rate in this range generally suggests an active management style, but not so aggressive that it would lead to excessive trading costs. The report also details some important changes. Effective July 15, 2024, Franklin Advisors Inc. was brought on as a sub-advisor. Then, on November 1, 2024, Putnam Investments Limited merged into Franklin Templeton Investment Management Limited, meaning the sub-advisory agreement with PIL was terminated and FTML became a new sub-advisor. Also, importantly, all Class B shares converted to Class A shares on September 5, 2024. These are significant structural changes, and they often happen due to consolidation in the financial industry or strategic decisions to streamline operations. Now let's switch gears and look at the Class C shares. For the year, Class C shares returned 22%, slightly underperforming the benchmark's 24%. The cost for Class C shares were higher, at 1966 or 1.76% for a $10,000 investment. This is to be expected, as Class C shares typically have higher ongoing charges due to distribution fees, which are often reflected in the higher expense ratios. Typically have higher ongoing charges due to distribution fees, which are often reflected in the higher expense ratios. Over 10 years, Class C shares delivered a 6.15% average annual return. Next up, Class R shares. These returned 22.29%, again just below the benchmark. The cost here were $142 or 1.27% for 10,000, which is more in the middle. The 10-year average annual return for Class R was 6.53%. Then we have Class R6 shares, which returned a strong 23.81%, the highest among the listed classes and very close to the benchmark. The costs for Class R6 are impressively low at 72.5 or 0.64% for 10,000. This class offers a better return and lower costs. This is likely because these shares are often used in retirement plans and have different fee structures. Their 10-year average annual return was 7.25%, the highest of all classes here. Finally, Class Y shares returned 23.68%, also very close to the benchmark. The cost for Class Y were $86 or 7.77%, which is also quite competitive. Their 10-year average annual return was 7.07%. It's clear that R6 and Y classes generally offer better cost structures and performance. Now, let's look at what the fund actually invests in. The schedule of investments gives us a detailed breakdown. As of June 30, 2025, the fund had about 95.2% invested in common stocks. The largest sector by far was banks at 24.9% of the total investments. This is a significant concentration in one sector. They hold major banks like Barclays, BNP Paribas, and HSBC. Another significant sector was insurance, accounting for 10%. Here they have holdings in companies like ASR Nederland, AXA, and Prudential. They also have a notable allocation to oil, gas and amp consumable fuels at 6.1% with companies like Cenovy and Shell. Looking at the financial highlights, we see the net assets again at 767,511,080. The report also details the fund's changes in net assets, showing a substantial increase from the previous year driven by investment operations and capital share transactions. The statement of assets and liabilities shows the fund's overall financial position. Investments in securities are valued at over $733 million. They also have significant amounts in receivables like capital shares sold, totaling over $12 million. $12 million. 12 million. 12 bolers alaj not dollars in trade tables for investment securities purchased are substantial, around $17.8 million. The notes to the financial statements provide further detail on accounting policies. One key aspect is how they value financial instruments using market prices, dealer quotes, and valuation models. They also discuss derivative financial instruments like forward exchange contracts and the risks associated with them. The fund actively uses forward exchange contracts with total unrealized appreciation of $5.1 million and unrealized appreciation of $4.1 million. These are used for managing currency risk, but they also come with counterparty risk, meaning the risk that the other party in the contract might not fulfill their obligations. The report also includes the auditor's opinion from PricewaterhouseCoopers, LT. They state that the financial statements present fairly in all material respects the financial position and results of operations of the fund. This is standard for audited financial statements and provides a level of assurance to investors. The report is signed by Jonathan S. Horwitz, Principal Executive Officer, and Jeffrey White, Principal Financial Officer, dated August 26, 2025. Now for my take. Putnam International Value Fund appears to be a well-established fund, engaging in active international value investing. The performance is generally strong over the long term, particularly for the R6 and Y share classes, which also offer more competitively for the R6 and Y share classes, which also offer more competitive expense ratios. The concentration in the banking sector at nearly 25% is something to monitor. While banks can be profitable, this level of concentration increases risk if that sector faces difficulties. The fund actively uses derivative instruments, mainly forward exchange contracts, to manage currency risk, which is a common practice in international investing, but does introduce counterparty risk. The changes in sub-advisors indicate ongoing adjustments to their management structure, which can be positive if they lead to better performance or operational efficiencies. Overall, the fund seems to be navigating the markets reasonably well, but investors should always be mindful of the sector concentrations and the nuances of different share class fees. Alright, that's our deep dive into the Putnam International Value Fund's annual report. What's your biggest takeaway from these numbers? Are you invested in this fund, or do these insights make you consider it? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate financial dissections. And remember, for more insights and discussions, join our Discord community linked in the description. Thanks for watching, and I'll see you in the next video.